welcome back. There's one stock that we can't do a show without talking about is Ola Electric. It's doubled since its listing last week. Today is one day when the stock is seeing some profit being taken off the table. Also, of course, what's important to note is there was a block deal that took place on the counter early today. Well, we have with us Puneet again, who's going to tell us what's happening on Ola Electric. Puneet, is it simply profits being taken off the table as the stock has doubled in the last 5 days, or is it more than catches the eye?
Well, definitely, there are among multiple things that might be working for the stock that we've discussed over the past week. We just thought we should look at some of the things that might not be working in favor of the company going forward. And the first one's, of course, valuations. EV to sales now at 12 times going forward. And that's a very expensive valuation for the company. No guesses that it's a very expensive valuation. It's also to note that it listed at 5 times EV to sales, which is generally the valuation that startups get. So definitely doubled in terms of valuation and stock performance. What's important to know is also that Zomato traded around EV to sales of roughly 11 times before it corrected again. So that could be one of the factors going forward. Profit booking definitely. Among the other things, of course, the new entry into the EV bike segment. Now that's a very niche segment going forward compared to industry volumes. Just 10,000 EV bikes sold last year versus scooter segment, which is already close to 9 to 10 lakh scooters which are sold in the previous year. So of course, Ola will have to be a category creator, and it's very important to see what the customer response is. Among other things, it is a loss-making company, and HSBC is the only brokerage covering the stock. They have a target price of 140, which is already crossed, and they estimate that Ola will be only profit-making from FY27. So another 8 quarters of loss-making entity is what is expected for Ola Electric. The other key reasons, that the cumulative market share of the newer players has reduced to 48 versus 59% in EVs, and also, the faster pace of launches has, crowded the market with a lot of EV launches, might be one of the few reasons. But overall, we'll see that these might be some of the reasons why, with valuation being one of the main centers that might be aiding the stock today. Back to you.
Oh, well, it's been expensive even when it listed, but at 150 rupees looks even more expensive. But thanks for that, Puneet. Raghvendra, this is an interesting one, right? It seems like the most aggressive, optimistic positives were priced in at Ola. It looked expensive at 70, 75 rupees, looked even more expensive at 150. Today's weakness should be bought into, you think?
Well, the major run-up in the stock post the IPO listing was largely because it was one of its kind, and the entire electric vehicle EV space theme is actually a very fancy across the investors. But today's correction and of around 7%, which has brought the price down to around 135, 137, we still think that it is expensive and can be avoided at current level. The reason being that it's huge imports from China coming into the Indian market through unorganized players. So that could be a very big competition for Ola Electric in the quarters ahead. As you said, the EV market is still 1% of the overall two-wheeler market space of India. So there is still a great headroom for it to gain. But so far, the traction has been on the growth side very slow. So that's another concern. Ola is still a loss-making company. Ola Electric is still a loss-making company. And until the company comes to its stable EPS, positive growth, positive profit, then we would review again. But till that time, it's an avoid at current levels or even at levels of 120, 115. We would wait for the stock to report its quarterly earnings, see if there is some good traction in terms of profitability and management do walk the talk. Till then, it's a avoid. We would be happy to sit on the fence and wait for the stock to correct into double digits again.
This is